What is going on, everyone, and welcome back to the channel. So today I wanted to explain what is going on with GameStop, AMC, and a bunch of the other short squeeze stocks. I want to talk about what is going on, what should we be expecting in the future, and then I want to dive a little bit deeper into some of the restrictions that we're seeing with brokers like Robinhood, why that was a problem, and now what to do going forward. So real quick, if you wouldn't mind making sure you're jumping down, subscribing to the channel, hitting that thumbs up button. We do have a live stream tonight when I'm filming this video. When it comes out tonight at 8 p.m. Eastern, make sure you're there. Otherwise, it's usually on Sundays. So that said, we have GameStop up on the screen here. Look at the progression of GameStop. Let me actually take myself out and move myself down a little bit here so we can see what is going on. The stock was down below $5 a couple months back over the summer, and now look where it is. It hit $4.83. I actually hit $5.15 the pre-market hours, I believe, on Thursday morning. So what we really saw here with a stock like GameStop, right? We saw a combined effort by those on social media, those on Reddit, to buy the stock, buy call options of the stock, when they knew that there was a ridiculous amount of short interest. Not only did Citron Research come out with their own short thesis on GameStop, but there were others who were short, and the stock actually reached points where more shares than were available were shorted, which to many people doesn't make sense. So there were hedge funds, there were traders that were over leveraged into short positions, which essentially allowed for the short squeeze to get significantly worse when the stock sees some more buying pressure. Because if you're short, you are borrowing shares to sell. And then what happens is that once the stock starts going up, right, you don't have a capped loss, right? You could lose an infinite amounts of money because the stock could just keep going up and up and up. If you were to buy shares and the stock went down, you obviously have a capped loss at whatever your initial investment was. So those who were shorting the stock down in here, back when the stock was around $38, $40, the stock starts pushing up to 75, pushing up to over 125. These short positions are down massively, and they're either forced to cover and buy back shares, or these firms, these hedge funds that were doing so, were in a really, really bad spot. And the same thing went on with AMC. AMC, not to the same degree as GameStop, because if we take a look at AMC's chart, look at the past couple of years, we can zoom back out and see that AMC was actually trading up around $30, up around $33 when it was at its peak back in 2015. That's when we saw AMC trading over $33. But nonetheless, still very, very significant. So now we kind of have a decent understanding as to what happened behind the scenes. There were some shorts that were over leveraged. And now what actually happened the past couple of days? Well, everyone's going to be talking about this drop right here. So look at AMC hitting highs Thursday morning up $23 and then dropping down to hitting lows of $6.50 intraday on a Thursday. Even take a look at GameStop hitting $514 in the pre-market hours before dropping down all the way to $112 intraday. Now, why was that the case? Now, we saw brokers like Robinhood restrict users from buying shares of GameStop, of AMC, and actually there was a point where there was 13 securities that they had limitations on buying shares. Now, if you had a position, you could sell, but you couldn't buy. Now, what does that do? That makes this a one-way trade. And so for those hedge funds that were able to regroup, who were getting absolutely taken to the woodshed because the stock hits 5.15 the pre-market hours, they're sitting there, if they still have a short position on, which we can talk a little bit deeper about where they probably made their money. But if they're sitting there with a short position still on, they are getting shellacked as this thing is pushing up. But now, once they realize this is a one-way trade, this stock comes down to 112, they had the ability to let this happen and at least recoup some losses or get out of this trade or reestablish, get some cash ready, and then initiate new shorts if they were to cover previously, initiate new shorts back up here over 500, while the stock then tanked literally $400 from that price. Now, we will come back to this, but remember this, okay? GameStop closes up here over 300 on Wednesday. The stock hits 515 and then falls and then closes down fairly low, closes down around $200 on Thursday. Remember why that's important, because it was down significantly. It was down over 10%. We'll talk about that in a second. But really quick, I wanted to talk about why this stuff happens and why these stocks were restricted from trading. Well, it comes down to a clearing firm that these brokers actually go through. And so the clearing firm is the one who's facilitating these trades. Now, we'll talk about Robinhood's kind of speculation here in just one second. But Apex Clearing, for example, many brokers use Apex Clearing, and Webull, for example, uses Apex. Now, Apex called up Webull's CEO and says, hey, we have to restrict the buys of these 3 securities. And there are more aspects to what goes on behind the scenes. For example, DTCC and the NSCC. So essentially what happened is the clearing firm calls them up and says, hey, if you have users, if you have customers who are buying and selling, we cannot guarantee that if they buy shares right now and then sell those shares due to the volatility and due to the time it takes for these shares to settle, we cannot guarantee that we have the cash to pay your customers, so you have to restrict that. And the worst thing for a broker would be if you sell your 100 shares of, let's say, GameStop, right? And you sell this thing up at like $330, and because there was so much volume, so much volatility, they had a lot of people doing that, right? You sell your shares and you're expecting to get, $325, for example, times however many shares you had, and you don't get that. That's a bigger problem, and people would be up in arms to a whole nother level if that's the case. Now, it seems like the lesser of the two evils, at least on the clearing firm side of things, was to just restrict the buys. Restrict the buys. That's all we can do. Now we have users up in arms. Apex was able to regroup and quickly allow trading and get things under control. We had now Robinhood not allowing this to happen. And so everyone's blaming Citadel Securities. Why Citadel? What does that mean? Well, if we dive a little bit deeper into Citadel, Citadel actually is one of Robinhood's biggest customers. And so because you have your free trading, everyone loves their free trading. It's awesome. I don't have to pay commissions and all that stuff. Well, that's great. But here's the problem. In order to keep those commission-free trades, your trades are sold to the market makers. Citadel is one of those market makers, right? And Citadel has a few different parts on the back end, but to make things fairly simple, we saw that Melvin Capital, right? Melvin Capital, one of the funds that got absolutely crushed with a short position on GameStop, Citadel tried to bail out Melvin Capital. So you see the conflict of interest here. We see that Citadel is one of Robinhood's largest customers, and Robinhood sends their order data through Citadel. Now Citadel is bailing out Melvin Capital. So we know that Melvin Capital is short, we know that Citadel is trying to help them, and we know that Citadel is one of Robinhood's largest customers. Robinhood relies on this for them to actually be able to make money and for them to continue the free trades. So Citadel pays tens of millions of dollars for this order flow, but the actual speculation here is that they're actually taking the other side of the trade. So they're paying tens of millions of dollars for your order data, but what are they doing in the meantime? Well, they're taking the other side of the trade and making small bits of money here and there, but they're compounding that by so many trades every single day. And so that's how it does it. And they are pocketing the difference between that spread. And so people talk about limit orders and they talk about market orders. So when you're putting in market orders, you're leaving it up to the market and you're letting them take the other side of the trade. Whereas at least on limit orders, to a degree, you have more say in where you're going to get filled. Now, why is this coming up yet again? Well, because back in 2017, the SEC fined Citadel $22 million because its algorithms were ultimately screwing the retail investors. So you're kind of seeing where this is coming from and why this is not necessarily new, but now because of what's happening, we're really starting to see it come to light. Now, there's some big statements being made here, and one of those by J.E. Carla, editor of the business newsletter Contention, saying that the service is free, and so you're the product, and those users of Robinhood need to understand that. Now, at the end of the day, they are willing to suicide bomb their own business to protect the real powers from the consequences of their internal contradictions. So they say, right, they're a broker of the average person, right? They're the broker, right, for the retail trader. But at the end of the day, who's making money here? They don't realistically care about the retail trader. They actually care about their customers, right? That's where they're making their money. They're not making money off of your orders, your commissions. They're making money because you're involved, and then they're making money on the back end for someone who's taking your order data. Now, while this is in front of us, some of this is speculation, so don't take this all literally, but a lot of this is starting to make some sense as to what is going on. So, now that we understand this, now that we understand what is going on, we can kind of see what's happening behind the scenes, we start to see what happened on Thursday. So you realize when they restrict the buying of these securities, it's a one-way trade. Now, it was not just Robinhood. It was other brokers as well who had issues with their clearing firms. And I do believe that there was an issue of not being able to give customers the cash for the trades. So I understand that. And I'm not holding that against Robinhood just yet. Ultimately, I want to see more information. I want them to reveal what exactly happens, who is told what, who is paying you, how much, all of that stuff. We want to get that all out in front of us, and we want to get an understanding as to exactly their motives to what they did. But remember when I said that GameStop, AMC, and a bunch of other stocks, they were down 10% on Thursday? Why is that important? Well, take a look at this. This is from the SEC, and it's called short sale restrictions. And so the alternative uptick rule is designed to restrict short selling from further driving down the price of a stock that has dropped more than 10% in one day compared to the closing price the previous day. Go back to GameStop. That's what we have here on Thursday. From Wednesday to Thursday, we had the stock down more than 10%. So why does this shape what is coming in the future? Well, if GameStop was down more than 10% on Thursday, you could not initiate a new short position on Friday. So we had a push up in the pre-market hours and then a sell-off towards the end of the day. Now, this sell-off was actually fueled by those who had shares who were selling it. And maybe it was because it's the weekend, it's Friday, I don't want to have to worry about this over the weekend. I don't know what's going to happen, and so you sell some shares. So now the question is going to be for AMC, for GameStop, what happens come Monday and Tuesday? When new shorts can come in and hammer the stocks down, you're going to need buyers to be able to match that and beat that. And if that can't happen, these stocks will probably come down. And if you reach a point where people start saying, I can't handle it anymore, well, the stocks will probably come down. So unless you see a more unified and targeted effort, because when you start spreading things too thin, you think GameStop, you think AMC, you talk Nokia, BlackBerry, NAKD, all these different stocks, SNDL, if everyone's spread thin, it is going to potentially allow shorts to come in and really hammer these stocks down, because they have no short sell restrictions for Monday. So what I'm thinking here is let's watch what happens Monday, see what happens. If the stocks hold up fairly well, then what's going to happen Tuesday? Because we're probably going to get a lot of new shorts into the stock Monday. As crazy as that sounds, you're probably going to get a new rotation of shorts coming in, whether that's retail, whether that's institutional, whoever it is. And then Tuesday, Wednesday could be the days where we get the big squeeze. We see a further push up because the shorts have to cover and the stock continues to make a push. Some are saying $1,000, holding GameStop to $1,000. I'm not here to say that's what's going to happen, but it's going to be very interesting to see what happens come Monday and Tuesday now that the short sell restriction is off because these stocks were actually up on Friday. So a lot of stuff going on behind the scenes, and I hope this video was somewhat helpful in terms of explaining some things. Make sure you're tuning into the live stream tonight if you're watching this video when it comes out. If not, subscribe to the channel, hit that thumbs up button, and make sure to grab your 4 free stocks with Webull, because this is the platform that I'm using. I watched a CEO interview from Webull. He was very transparent on what happened, and they have no more restrictions on what is going on. They had a temporary morning shutdown on a couple stocks, just like many other brokers, interactive brokers. We even saw issues with TD Ameritrade, E-Trade. Every broker for a period of time had this kind of issue. They were able to iron things out. So I use Webull all the time. I really recommend it, especially with what's going on. They have an awesome mobile app. The links are down below to get that sign-up bonus. Once you deposit $100, you'll be able to claim the second of the 4 free stocks, and those are of higher value, minimum of $21 when you sign up. So I really appreciate you guys for watching and tuning in. Hit that thumbs up button, and I will see you guys in the next video. Peace.